Hi, I wanted to welcome you to the Divorce Planning Podcast. I'm Carri Goldring, and I'm in the mortgage business, and I do planning pre-divorce for people who are either going to refinance their home, do an equity buyout, or plan to purchase a new home and make sure that everything in the divorce decree is worded properly and the numbers and the planning is taken care of so that you can go through the underwriting process smoothly. And I would like to introduce you to other people who are interested in the divorce planning process so you can get a real education of what's involved. Hope you enjoy. Hi, today I have with me a special guest. I have Chloe, who is on my marketing team, and thought it would just be a great way for us to answer some basic questions about mortgages. And Chloe, I'm happy to have you. So thank you for being here.
Yeah, thank you, Carri. We've had a blast working together, and I'm happy that I could be here to kind of chat a little bit about, what you do and how you help people.
That would be great. So I know sometimes when we do marketing stuff, we get into, because you don't do mortgages, but obviously you do the marketing for them, we get into these discussions of what am I trying to get across? And, then I end up, teaching you some things. And we thought it would be great to do a podcast because we're like, oh my God, so many other people probably would love to hear the same explanation that you do.
Yeah, I feel like it clicked we were talking, last week, and you did an amazing job of I had a simple question and you answered it, in real people talk. And I was like, this is what people need to hear. You put it across and, anyone can understand sort of, what you're talking about, even if it's a complicated topic. So you do a really good job of making it very human first.
Well, thank you. So can you think of something or some question that maybe I can answer that would be interesting to you and then obviously a lot of other people?
Yeah, I think people get a little maybe intimidated by closing costs. Would you maybe want to talk about what all goes into your closing costs and what you can kind of expect out of that?
Sure. That is a great question. And you know what's funny is prior to COVID, we would meet with people a lot in person and we would have paper, right? So when it came to the piece of paper where all the closing costs were, it was very common to say, this explains this piece of paper and this is what you're signing, go through the closing costs. And nobody really does that anymore. So it's always what's your monthly payment and how much money do you have to bring to closing to make this deal happen? But no one talks about what those costs are. So great things. And there's so many costs, which make it so confusing. So you have like our costs, our mortgage costs. And then what I've noticed is different mortgage companies call them different things, which makes it even more fun to, talk to different people. But typically you would have like an underwriting fee and a processing fee, which are just fees to help reimburse us for our fixed costs. So an underwriting fee, you could explain as the cost to have your loan underwritten, meaning the person that's going to look at the loan to make sure it fits all the parameters to sell it on the secondary market, which is what our ultimate goal is to package a mortgage that we can then sell to make money. So a processing fee could be described as the processor, the person who's getting all the documents ready for the underwriter to review. There's also a fee called a tax service fee, which is a fee that doesn't go to the mortgage company, but when you make your mortgage payments and you pay taxes and insurance with your mortgage payment, you actually hire a company to make sure that the taxes and insurance are getting paid all the time. Because what happens if you don't pay your property taxes after a while, your house can be foreclosed upon, which of course hurts our lien on your property, right? Because we want to be able to foreclose if you don't make a payment. We don't want someone else to foreclose if you don't make a tax payment. So you have that fee, appraisal and credit report. which are somewhat more self-explanatory. The appraisal is the fee to get the appraiser out to the house to do the appraisal, credit report to do the credit. We also have to do a flood check on loans. So there's all these flood zones, and we have to determine what flood zone a home is in, whether or not it needs insurance, which is becoming more apparent, and more people, I think, understand that right now than ever before. So those would be a lot of like the mortgage company costs. Then you have a cost of points or discount points, which is could be a whole separate topic. So discount points is when someone chooses to pay interest up front to get their interest rate low. So you have to think of it like a sliding scale. So the interest rate goes up, the points go down, and they can go down to 0 or vice versa. So typically, if someone's going to live in their home for 5 years or more, it makes sense to pay some of that interest up front to get a lower rate, because over the time span that you're going to live in the house, you'll end up paying less interest. But you can choose to. Some people just can't afford to bring extra money to closing, so then you just don't do it. Then title companies have a bunch of fees. So one of them is they have title insurance, which insures us as the lender that we do a first lien on the property. They do a check to make sure that the seller is really the seller. Are there any, like, what if a builder went to the house and they built a deck and no one paid them, and now they filed a lien against the property? So it looks for all those things, unpaid taxes, that kind of stuff. They also charge what's called a closing fee to have somebody actually prepare the papers, go as a notary, watch people sign. And then they have all these other little teeny fees like wiring instructions. And I don't know, there's a whole bunch of little $25 charges here and there for other stuff. And you have recording fees at the county. So every county charges a fee to record paper. So your deed, which is the ownership of the home, and your mortgage, which shows our lien, gets recorded at the county. And they usually charge a per piece of paper fee. So you have that fee as well. And then here in Michigan, most of Michigan, our taxes are paid in advance. So the seller has already paid taxes for the year. So when you go to closing, you have to reimburse them for taxes they've already paid when you're going to own the home. So it does get,
yeah.
And then you have, if people are going to put up money for taxes and insurance for an escrow account, then that becomes a fee as well. So there are a lot of fees, and they vary depending on the price of the mortgage, because title insurance is based on a cost of what you're borrowing, and how much property taxes are on home insurance makes a big difference.
That's awesome. That also brings me to another question that I had in mind was, if somebody, is looking to get a loan and maybe their credit score is not the best, what would you recommend they do to maybe build their credit? Or what would you tell somebody that just needs a better credit score for their loan?
Great question also. It's easiest if I look at their credit, so I can give like pretty good ideas of what you could do. I'm definitely no credit repair expert person, so I can only go by what my experience shows. Sometimes if it's a little over my head, we might have to refer to a credit repair person. But I would think the easiest, like down and dirty things that everyone should know is to have at least 3 lines of credit that you're using, whether it's car, mortgage, credit card, 3 credit cards, but you should have 3. And obviously the typical stuff, right? No bankruptcies, no foreclosures, no late pays. We could see the baby, and that's exciting. So you could have, so that's like the bonus of being on YouTube, right? You could see the baby. So you have those. And then the one that a lot of people don't know is that they think that if you pay your credit cards off every month, that you get all these bonus points on credit score for that. And that is not true. There's no credit scoring that I am aware of that gives you any points for paying your credit card off in full every month, but they go off of what's called a percentage of utilization. So if you have a credit limit, let's just say $1,000, you should never spend more than 29%, so $290 in a billing cycle. So you may always have a balance, right? And that's the whole purpose of a revolving credit card, is it goes from one date to the next date, and then the bill comes, but the bill comes after that last date. So then you charge more things. So it's revolving, it's always moving around. But if you keep your utilization low, that builds your credit score up the most. So I've talked to people who think, oh, well, I charge it up to my credit limit, but I pay it off every month, so I'm doing good. And in essence, you are doing good financially. You're just not doing good for credit score purposes.
In that situation, could you always ask for, a higher amount on your credit card too?
Sure. Yeah. If you feel like you're getting up to that credit limit or you're hitting 50% every month, then if you can ask for more of a credit line, or maybe go to a second credit card to spread it out a little more, you should do that if you're looking to improve your credit score.
That's awesome. And then I think I just have one more question that I think would be beneficial to talk about is what happens after, your loan is approved? What are those next steps?
So once your loan is approved, which means the underwriter has reviewed all your documents and they are ready to say, yes, we can loan you money. Sometimes they'll say, yes, we can loan you money. Get ready for your closing, meaning your formal signing. Or they'll say, yes, I know I can get you ready for closing, but I need a couple things just to make this a perfect package, but it's not going to change my decision. So once you get all that, then they call it final approval. And then from there, the processor normally makes sure that you have your homeowner's insurance in place. They do a very quick check to make sure you're still employed. And I'm sure there's other loose ends that I am unaware of that they tie up. And then you get issued what's called clear to close. And once you're clear to close, we say that you need 24-hour notice to tell us to prepare all your closing papers. So now you have your homeowner's insurance on your new house. And the insurance industry uses a term called bound. So you always have to say, I'm going to bind my insurance policy. And that's their terms for making it final. So you have to, and some insurance companies require that they go to the house, they take pictures, others don't. So you don't know how much lead time they need. And then our closers work with the title company closers in tandem, saying, okay, here's all our mortgage costs. This is what we've determined property taxes are. This is what we've determined our recording fees are. And then the title company says, oh, well, they gave an earnest money deposit of this. We need to give them credit. Oh, there's homeowners association dues that they have to reimburse the seller for. And the two of them kind of go back and forth till they get to the point where they're like, I 100% agree with you, and we're penny perfect. And then they disperse how much money is needed for the closing. Usually they ask for a wire transfer, and then all the money goes to the title company. And so like our money goes to the title company, the person's money goes to the title company, and then it's the title company's job after closing to disperse all the funds to whoever needs or should have the money. So they'll pay off a current mortgage. They'll give money to the seller. They'll give us money to put aside for taxes and insurance. So they disperse all funds and make sure everything balances out.
That's awesome. This was so much fun, Carrie. I loved, talking about these things that maybe could benefit other people if they don't know maybe where to start or what questions to ask. So thank you so much for your time. This was a blast, and you're just so good to do.
Well, thank you. I loved it. And
Yeah.
I think we should do this again. I think we could do this more often for sure. Well, thanks for your time. I really appreciate it.
Yeah, of course. We'll talk soon, okay?
Have a great day.
You too.
I hope you enjoyed the podcast. I'm Carri Goldring, and if you ever have any questions regarding mortgage, feel free to give me a call or send me a text message, 248-420-4524. Hope you enjoy the rest of your day.